Welcome back to Investing Talk Podcast. Today we're taking a close look at Sportradar Group AG.
That's right. And our mission here is, well, really to dig into the key information from recent reports, news, basically give you a clear picture of where this sports technology company stands right now.
Yeah, we've got quite a bit to unpack: due diligence, performance analysis, some recent developments.
The big question, I suppose, is can Sportradar hold on to its leadership spot, especially with, the market evolving so fast and some recent volatility?
Good question. So where should we start? Maybe the financials.
Sounds good. Let's look at their health, financially speaking. So the preliminary Q1 2025 revenue, it's estimated between 307 and 311 million.
Okay, 307 to 311 million. And profit?
Preliminary profit for that same quarter, Q1 25, they're estimating between 20 million and 24 million.
And, I saw they're targeting something like a 15% compound annual growth rate through 2027. That feels pretty ambitious, doesn't it? Especially in such a competitive field.
It really is ambitious. So
Yeah.
15% CAGR, yeah. But, maybe achievable. You've got this big wave of legalized betting expanding globally.
Sure.
But yeah, hitting that consistently, it's going to depend heavily on, well, getting into new markets effectively, leveraging their tech against, rising competition.
So that's definitely something for us and for you listening to keep an eye on in their reports. See if they're tracking towards that.
Absolutely. It's a key metric for their long-term story. Oh, and their adjusted EBITDA for Q1 25, that's expected between 56 and 58 million.
Interesting. But these are just the early numbers, the preliminary ones, right?
Exactly. Just estimates for now. The full detailed Q1 results, those land on May 12th, 2025.
Right. So we'll get a much clearer picture then. Always makes you wonder what's tucked away in the full details.
Well, yeah. And what's kind of important here is while these initial figures, they look okay for revenue and profit, we don't have the nitty-gritty yet. Things like the PE ratio, debt to equity, free cash flow, return on equity, those core valuation metrics.
Absolutely essential for a proper analysis. We need to wait for the full release for those.
Definitely.
Okay, so stepping back from the numbers for a second, for anyone maybe less familiar, what exactly is it that Sportradar does? What's their role in this whole sports tech space?
Sure. So Sportradar, they started back in 2001, based over in Switzerland. They're essentially in the software application game.
Okay.
Serving the sports betting industry, the media industry, really all over the world. They provide these critical platforms, data feeds, kind of the engine behind the scenes for a lot of betting operations and media content.
So it's way more than just putting scores up on a website.
Oh, much more, yeah. Think real-time sports data that's like the fuel, right?
Yeah.
For betting platforms. They also build the betting tech itself, virtual sports included. They offer managed betting services where they kind of run things for operators.
Okay.
Plus, sports media content solutions for broadcasters, publishers, and then there's the integrity side, helping sports fight match fixing. And performance analytics for teams.
Wow, okay. So they've got their fingers in quite a few pies then. It's not just betting.
Not at all. And if you connect the dots, their tech is really about boosting fan engagement, making things more immersive, and on the other side, giving betting operators the data tools they need for, say, risk management or getting new customers.
That makes sense. Puts it in context. So given that role, what would you say are their main competitive advantages? What makes them stand out?
Well, they're definitely seen as a leader globally in sports tech. A big advantage is their own proprietary technology for delivering that data in real time. Super crucial for live sports and betting.
Right, speed matters there.
Hugely. And they've built up these really strong, long-standing relationships. Think major sports leagues, big betting operators worldwide. That gives them massive market access and, strong brand recognition.
Those relationships sound like gold in this industry. Hard to replicate quickly.
They really are, and it looks like they're not sitting still either. They seem focused on creating more immersive fan experiences using AI-driven analytics.
AI, okay. How does that fit in?
Well, you can imagine algorithms predicting betting trends, maybe personalizing content for fans, or just digging deeper insights out of all that raw sports data. They're generally considered, a front runner when it comes to betting intelligence solutions.
Gotcha. Okay, so broadening out again the bigger picture.
Yeah.
What are the main trends driving growth here? And flip side, what are the big risks they face?
Well, the growth drivers are pretty clear, I think. You've got more and more places legalizing sports betting.
Right.
There's just this huge demand for instant live data. Then you have advancements in AI, machine learning, making the analytics way more powerful, and just this general push to keep fans more engaged.
And Sportradar seems kind of positioned right in the middle of all that.
Exactly. It feels like they're strategically placed to really benefit from those trends coming together.
Makes sense. And the potential headwinds,
Hmm.
the risks.
Number one is probably regulation. Gambling laws, right? They can change
Mhm.
fast, and they're different everywhere. That's a constant challenge.
Yeah, that's always a factor in this space.
And then there's competition. Always. New tech firms popping up, existing players innovating. Someone could come along with something disruptive. You always have to watch for that.
Okay. Let's switch gears a bit to recent events. There was news in April 2025, about a public offering of shares, Class A shares, by selling shareholders, and also a share repurchase happening at the same time.
Yes, that's right.
How do moves like that usually play out for a company like this? What's the impact?
Well, it's interesting because you've got two things happening at once. The offering, where existing shareholders sell shares, that can sometimes put downward pressure on the stock price short term. More shares available. Right.
Dilution of potential.
Potentially, yeah. But then they also announced a share repurchase, the company buying back its own stock. That can kind of counteract the offerings effect, reducing the total shares out there.
And it signals.
Often it signals that the company thinks its stock is maybe undervalued. It's a way of returning capital to remaining shareholders, too. So it's a bit of a mixed signal, potentially. Creates some near-term uncertainty, likely contributes to that volatility we mentioned.
Gotcha. And we also saw news back in February they extended their partnership with Major League Baseball. That sounds pretty significant.
Oh, absolutely. That's a big one. Extending with MLB, focusing on enhancing data and analytics capabilities starting in the 2025 season.
So locking in a major client, essentially.
Exactly. It just reinforces how crucial their data infrastructure is for these major leagues, really underlines the value they bring, to the whole sports ecosystem.
Definitely. Okay, so looking at their annual report, the one from March 20th, 2025, any key financial insights from that?
Well, the main theme was continued revenue growth, which makes sense given that global demand for their data services we talked about.
Right.
And it also sort of highlighted that, like many tech growth companies, their focus might be more on reinvesting back into the business R&D expansion rather than maximizing immediate profit.
Which is pretty typical for growth tech, yeah.
Right. For the detailed earnings per share picture and investment strategy, you'd really need to dig into their Form 20-F filing.
Okay, and how does that maybe tie back to that share offering and repurchase we just discussed?
Well, the offering could be seen as a strategic move to, bring in more capital, maybe strengthen the balance sheet, maybe fund future growth, perhaps acquisitions. It's a strategic financial move investors will be watching to see how they deploy that capital.
Okay, let's try and summarize then, boiling it down. What are the key strengths you see for Sportradar?
Okay, strengths. Well, definitely their market leadership position. That's number one. They have a really broad, diversified product portfolio hitting different parts of the sports and betting world. Their integration of tech, like AI, seems strong. And they've got that wide established client base, those relationships again.
Right. And on the flip side, the red flags. Or maybe areas for caution.
I'd say the recent share offering is something to watch. Potential for short-term dilution, like we said. It adds a bit of uncertainty.
Okay.
And then there's that inherent exposure to regulatory risk in the betting industry globally. That's just part of the territory, but it's always a risk factor.
Makes sense. And competition. Who are they really up against?
The main names you hear are companies like Genius Sports Group, Stats Perform, Kambi Group as well.
How does Sportradar differ, would you say?
Well, Sportradar seems to have this more kind of end-to-end integrated approach, covering betting operations, media content, and integrity monitoring all under one roof, maybe more so than some competitors who might specialize a bit more.
Interesting distinction. Okay, looking ahead then, future outlook. What are some potential positive catalysts we should be watching for?
Definitely watch for how they integrate new technologies. Anything that boosts data accuracy or enhances those fan engagement tools could be a real positive. And of course, the upcoming earnings reports, especially the ones after the share offering. They'll be crucial to see the impact of that capital raise and where they're headed strategically.
And the risks on the horizon remain.
Pretty much the same ones we discussed. Regulatory changes are always looming in betting. And competitive pressure, that's not going away. Always need to keep innovating.
So, putting it all together, if you had to give a sort of general take or recommendation on Sportradar, say, as of late April 2025, what would it be?
Based on everything we've looked at, I'd lean towards something like a hold or maybe a cautious buy.
Okay, a hold or cautious buy. What's the thinking behind that?
Well, the rationale is, look, they clearly have strong long-term growth potential. They're right at that sweet spot where sports tech meets the growing betting market.
Right.
The product range is diverse. They're market leaders. Those are big pluses. But that recent public offering, it just introduces that element of short-term uncertainty, that dilution risk.
So potential upside, but with a near-term question mark.
Yep. Exactly. So investors probably need to watch things closely, monitor those quarterly results coming up, keep an eye on any regulatory news.
Okay, so wrapping it up then. Sportradar seems like a key player, growing industry, solid long-term picture, but maybe a little near-term noise from that offering to be aware of.
That sums it up pretty well, I think. And, we definitely encourage you listening to do your own homework, especially look out for that full earnings release on May 12th. Check out what analysts are saying, too. That'll give you a much more complete view.
Absolutely. So thinking about all this, what really stands out to you about where Sportradar is right now? Any big questions this raises for you? We genuinely love to hear your thoughts. And hey, if you found this discussion insightful, please do subscribe, give us a like, drop a comment. It really helps us keep bringing you these kinds of detailed analyses.